Hello, currency traders. It's recap time. Joe with you here. It's July 31st, Thursday, the last day of July. As we kind of finish up the summer, we actually technically have about a half a month or about a month left, but we'll see as things start to pick up. You guys know the rules here. Just follow along. Make sure you take responsibility for what you get from all of our courses. I'm going to take a look at the news of the day. We did have some pretty interesting things happen over the last couple of days. Take a look at some stuff technically, and if I've got some trades to share, you guys know I'll do it.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
Moving into the market analysis, we didn't really have too active a day on the currency side, save basically the yen. Let's get into the news of the day. So the U.S. markets closed lower today. The expectations were for the chance of a cut. I do believe that the U.S. markets were looking for the Fed to keep things unchanged, but hey, seeing a reason to maybe cut as early as September. However, we've seen some strength in a lot of economics numbers lately, and so we did get that pushback from the Trump administration saying, hey, Powell's dropped the ball and should have cut earlier, and so we've already got that little bit of a tumultuous situation going on, which I believe was expected. Powell did come out and say that he was focusing more on the labor market. We have seen unemployment claims drop consistently over the last few weeks. A pretty stable, strong economy. However, unemployment rate, which actually comes out tomorrow, and the non-farm payrolls also tomorrow, might have a little bit more emphasis than would have been in the past. So we'll see how the markets react to it. We actually did get a very interesting candle today on the SPY. We'll take a look at it here in a second. On the other side there, or on the outside of the U.S., the yen slides. Bank of Japan came out, kept interest rates flat. In negotiations with the U.S., things look pretty good. However, did acknowledge inflation forecasts might stay, we've got to be aware of that, but kind of believed in, look, where we go forward, things might kind of even themselves out. And for some reason, the yen slipped. It slipped quite a bit. We'll take a look at that chart here in a second. But the expectations to keep them in line were intact. So take it for what it is. But here it is. The yen down 0.8%. Biggest mover. Outside of that, U.S. dollar hanging in there. We'll see where that goes. The franc had a nice bounce. The euro bounced a little bit. Pound flat, CAD flat, Aussie and Kiwi. But so far, there's not a lot panning out when it comes to trades. We'll take a look at them individually here in a second. The S&P closed down 0.37%. It actually hung in there a little bit. The Dow was down almost 1%. The Qs, now understand, folks, closed barely low, 0.03%. And a lot of it had to do, I think it would have come down quite a bit more, but Meta blew numbers out of the water, projected higher. Big move up in Meta, big move in Microsoft as well. And we know that the weighting on those is enough to actually keep that from falling. So the Qs were pretty much flat. If you want to take a look at that. World Index down as well. Cryptos dropped 2.15% to kind of a flat area, kind of a zero area. We'll take a look at those. Gold, a little bit of a blip, and oil slid a little bit after a pretty decent bounce it had a couple of days ago. Not a lot to really report home about, honestly. Just kind of push-pull outside of the yen and the dollar. Bitcoin Cash, Ethereum, Litecoin, all down. We'll take a look at those charts. So where are we at when it comes to our market outlook? Now, the market outlook for the month is still a +3. We're still above levels. We're still above averages. We're still at this plateau area. However, we have a very interesting candlestick associated with some interesting volume. So the weekly outlook might be a little bit more cautious, kind of a zero outlook, maybe a -1 in the shorter term. And this is what I'm talking about. So we've been talking about, hey, it's sometimes at the top things can get a little bit unstable, a little bit worrisome, but we've seen this. We've seen these markets stabilize after making a pretty good base, a little bit of a hiccup, and then boom, they're off to the races. I mean, look at the pull away from the 20-day moving average. A little scary up here. Things could get worrisome. We could fall apart. Even we did make mention of one candlestick here. Let's just highlight it again. That's going to be this kind of a gap up, came back down. Ooh, especially at this high base level. Okay, we could see 1 or 2 days come back down to test support levels, and it never did. Now, one thing I'm going to compare today's candlestick with this candlestick that I just drew is the associated volume. So let's take a look at this current candlestick. Now, this is after a pretty major piece of news, expectations of at some point the Fed should start to ease, maybe not cut rates, but at least talk about it. And we've seen some pretty strong economic numbers that have kind of pushed against that. But we did get this gap up and a move down. So a pretty substantial move. This is a gap up, down. This is dark cloud cover. I guess I can just call it a bearish engulfing candle. A dark cloud cover would usually be a little higher. However, it's a little bit more significant. I'll just start with that word because of the volume associated with it. So it did come after a pretty substantial event, an expected event, and it is one of these highs. These markets have been setting high after high after high. So is this the hiccup or the first, okay, now it's time to take some profits? Well, that's the million-dollar question. We have seen some earnings on some of these tech companies that have done very well. We've had some companies kind of miss and project lower, but we just need to follow the sentiment. Now, I do really want to lean on this volume. The volume was high, but we are still at this support level. And I think that 6,300 is a very great argument. Now, could we see a big candle that blows below it? Sure. But how many times have we seen candlesticks with a big push with volume that actually has something like this? Here's a good example. Let's take a look a little bit there. Fake outs, head fakes. So we do need to see follow through. We do need to see continuation. Unfortunately, folks, by the time we get that, it's 2 or 3 days past it. So it's time to be cautious here. There's not a lot of guessing. There's no reason to flip coins. When you're at an area where consolidation can happen or reversal signals can happen, with the continuation of something up that could be less probability than some sort of retracement, well, it causes that argument. So let's just kind of pump the brakes, stand off, and see what sentiment does with today's candle and today's volume. I'm actually looking really forward to seeing where we go. But for all intents and purposes, folks, continue to chart and try not to guess. Let's move over to our calendar here. Lots of different things came out that we've been looking for. I guess the biggest one's going to be on the U.S. side here with the Fed funds statement, press conference, in line. Powell comes out, hey, there's no reason to really get aggressive here. We're going to be leaning more towards the labor markets and its performances. I mean, we do have all sorts of different arguments on stability. Now, we got the JOLTS job report, which added less than expected, but our ADP non-farm employment range, that's big. That's a move to the upside. The expectations were already high for the GDP of an expansion of 2.5, and it could be just the reaction of what the economy did to go hoard stuff, worried about the tariffs. But that's a huge, huge move to the upside. Now, we will get revisions, right? So we really can't put all of our weight on that. But so far, I mean, that's strong employment, that's strong activity, strong growth. It's kind of hard to argue on the side of things slowing. Now, it could happen. It's just happening a little bit later than maybe the markets expected. On the Canadian side, we got monetary policy, no changes. Everything pretty much stayed the same. One thing that I will make the mention of is here's your Bank of Japan, in line with expectations, doing deals with the United States when it comes to tariff. But the monetary policy, or I think it was the press conference, and I'm not sure what it was because the yen was doing pretty good, and then all of a sudden, Thursday morning, it just kind of slid. So reaction, push-pull. Employment cost index, we saw a jump up in that. And then the unemployment claims, another drop. Not a substantial one, but it's another drop. The PCE numbers actually today showing right in line with a little bit of inflationary lean. So now that I've got that whole breath out, what does that mean? It's just going to be reactionary based on what is in the news and what people want to focus on. Truthfully, I think this non-farm employment change and the unemployment rate are going to be kind of hyper accelerated due to the fact that Powell said something about it on his press conference yesterday. Is that an excuse for the markets to continue to sell? Absolutely it is. Absolutely. When sentiment wants to change, it will. So the only thing I can really take from this, folks, is these numbers are here. The reaction of sentiment is what matters. It doesn't matter on if you believe in the numbers or not, or your policy, your side or your political outlook. It's what sentiment does with this at this point. So taking a look at that chart, it's a little bit ominous, at least for today. So let's just go ahead and take a look at some of the currencies out there and see what they did today. As always, let's start with the yen. And once again, this was the biggest mover today. And you can see it was doing pretty decent. It came in line with expectations based on the rate change. And then all of a sudden, boy, it just overnight started to roll over and fell apart as the U.S. markets were open. Now, this does give a little bit of opportunity when it comes to the momentum. Nice drop in the RSI with kind of a meandering moving average, pretty wide swinger. But if it can continue to break the support level, there might be a chance to use this with continued weakness against something stronger. Now, it might not necessarily be the U.S. dollar. I'm seeing the franc show some stability and some strength, and the CAD as well. So we can look outside of things that usually correlate, like the yen and the dollar. So it was easy for me just to go ahead and drop the yen down to a -3 as far as momentum. Let's jump over to the USD, the US dollar. Here it is here. It was been pretty good for quite a bit, breaking out. I like the breakout that it had here on the 4-hour chart. Obviously, the most volatile, it's in the news, and we've got all sorts of fun stuff we got to deal with. But keeping the interest rates flat and expectations of keeping them steady and strong will strengthen the dollar. So if that's going to continue, we should expect more of the same. So decent little breakout today. It was easy. I just jumped it up to a +3. I kind of had to. I had a range on the RSI staying above the upper levels. A beautiful turn, a very sustained, strong moving average, flipping the SAR, and then price action breaking level after level. Now, these can change. I mean, there's a nice breakout there, a little bit of a pullback, another breakout here. These can change and become overextended. So if you're a little bit worried about playing something on the extended side, you can just kind of eliminate the dollar for now and just kind of see what it does moving forward. Maybe it'll stabilize and give you something a little bit more consistent. Moving over to the franc, we were talking about the emergence of it being a little bit stronger. It did seem to be dying, but boy, look at the reaction that it had today. I don't know if that's just an oversold bounce or some sort of contrarian move. Hey, but it's a move enough to where we have to measure it. So without getting too deep, I'm just going to see what I can do. A good move to the RSI here, put it above that the 50 level. It might be a little anemic. We've seen it do something like that before. So to me, that's kind of glass half empty. Price action, we did see a significant break to the downside. This is a pretty strong pivot point. However, it's right in this area where it could just roll back over. So once again, it looks more of an anemic oversold bounce, maybe a bear rally. I have to keep that negative. Flip-flop on the SAR, that's great. I didn't really want to punish it too much. And since it's decided to stay kind of in this area, I'm going to give it its last little ditch effort to consolidate or slip higher above this price action. I'm going to keep it as a no call, and I'm going to say 0. But if this rolls over and confirms any sort of move to the downside, it is easily a -1, -2, and it's something that I'd look to short. The only thing that's got me scratching my head is how strong and how quickly these candles developed. Kind of funny because it was almost inverse to what we saw in the yen. So definitely a lot of reaction still going into some of these currencies. Let's jump over to the euro. The euro is a little bit more cut and dry when it comes to kind of that bear rally, as we do have the consolidation candles. Take a look at some of these shadows that have come up here, and here. It's just kind of failed. An RSI that actually never really even got to that 50 level, descending moving average and just breaking levels. So it was pretty easy for me to move the euro down to a -2, at least when it comes to its momentum today. Jump into the pound here. Pound is more of a low base consolidation, kind of a 0 move. I decided to give it a -1 just because it is a low base. You can see the moving average has come down. It's moving sideways. We've got a consolidating RSI that seems to, even if it gets above the 50, it doesn't stay there for long, but it's more of a flip-flop. I don't see any sort of increase in weakness with the pound unless we have some sort of news. So it's going to be this -1.0 guy that I'll just kick to the side and find something a little bit more volatile. The CAD is showing a little bit of strength. I actually kind of liked the CAD and the way that it's been moving higher. Some things that I did think were really interesting. I do like how it had this really strong bounce after it broke and came back. Now, if you guys remember just a second ago, this is kind of what I'm seeing the franc doing. at this specific area. Now, if we do get this similar movement, if the freight could do something like this and move higher, and then all of a sudden you could see how it becomes favorable. But it's a pretty good bounce back up to the upside. I like the higher high here, a consolidation, and it's actually retesting these highs. So the CAD is actually showing some strength. I do like the flip on the SAR. I like this turning motion here on the moving average. And take a look at this first shot off the bottom, right? It stayed there a little dip below the 50, but the RSI's kind of stayed in favor. So it's easy to keep this at a +2 for now. So let's just jump over to the Aussie and the Kiwi. The Aussie first. It looks like it's just kind of stair-stepping down. Not really massively out of favor. It looked like it was doing this really good breakout point, and then it's just stair-stepping itself lower. These don't seem to really crash as much as you think they would. They're out of favor or in favor. Right now, it's just kind of glass half empty, kind of a -1 situation. RSI is just kind of around below the 50 here. The moving average is flattening and lower. Flip-flop on the SARs, lower lows, lower highs. So we'll see what it does. If it can establish some sort of support at one of these major support levels, then this could be kind of a flag pattern. I don't really want to call it a bullish flag because it's more of a sideways. But if the emergence of risk on comes back, we would need to see something pretty significant. It would need to be above the 739, 74 area before I would look to put it as something favorable. So let's go ahead and just take a look at the Kiwi as well. And it's similar. It's actually a little bit, well, I don't want to say stronger. It does have a lower support level. I guess I'll give it that. So we got a pretty strong support level here. We've got one a little deeper. But it's still got that slow bleed going on, kind of like no one's really interested into putting a lot of money into it. The RSI has been kind of below that 50 for a little while, but it's just out of favor. So kind of a zero. -1 is where I kept it just because of this dissension going on. But it does have some support levels. But overall, I mean, there's not a lot of currencies that are strong or weak enough that I want to play with outside of probably the franc, the yen, the dollar. So let's look at what the cryptos have been doing, and they have just kind of been consolidating. They have been super strong. They've experienced a lot of fun for a little bit. But when it comes to kind of a plateauing market, I'm seeing a lot of that in the cryptos as well. Today's move, a good slip, a good push to the downside, expecting to see something a little bit more stable, but geez, crypto kind of does its own thing. I'm not sure quite yet, folks, if crypto is risk on or risk off. It just kind of does what it does. So with that being said, let's just chart it. It's within range. It's on the lower side. In fact, I think Bitcoin I ranked as one of the weaker ones. I kept them all pretty much as kind of a -1. I think crypto cash was a little bit better. And the only reason why is because I kind of need this to see this thing slip below a bigger support level for it to really kind of confirm, just because of the volatility in cryptocurrencies. Let's take a look at Bitcoin Cash, and it's a little stronger. I kept this at a 0. It's descending, but we have a pretty strong up move, kind of retesting a level. I mean, if it breaks below that, this is ominous, right? We have a descending high. So we'll see if it can consolidate and move higher. Even if it came back and hit this and moved higher, it's still technically kind of that 0+1 area. So I decided to keep it at a 0. The others, let's take a look at Ethereum. They're pretty much kind of this 0 as well, kind of a sideways consolidation move. I gave it a glass kind of half empty. There were some lines that I wanted to see it stay at. So this is kind of a tomato, folks. It's up to you. You can see the consolidation had here. It looked like it slipped before it. This is the line that I really want to see it above. So you can see there was a little bit of a slope as it bled forward. So a 0, -1, you could go either way. It's just not really doing much for me right now. Take a look at Litecoin. You could see kind of the same idea, just kind of stair-stepping lower. They've had a pretty good move. All of them have. But when I see them break support levels and using them as retests to move lower, I'm just a little bit pessimistic. So also a -1 here, but these could easily just turn right around. It just depends on the day. Taking a look at the RSI, a little bit out of favor, but they seem to hover just above or below that 50, especially over the last little bit. So there's really not much for me to go on. I knew there was going to be yesterday's FOMC statement was going to cause some stuff and make it kind of fun, and it has. It's been neat. Big move down in the yen, big jump up in the US, and it's just momentum for now, but it was cool to see the CAD come in and the franc as well, kind of pushing up to those levels there. So if we go out and take a look at some possible trades there, folks, let's just see what the dollar's done and what the yen has done compared to just some of the other currencies out there. So let's just get started with the Aussie US here. Just risk on, risk off, a little obvious. It seems like it's continuing, but not very aggressively. I know that the US dollar didn't do a whole lot today, and the Aussie really didn't drop too much. It was just more of a big bounce based on some announcements. So I'm not really seeing anything that I'm comfortable with. It is breaking a little lower, but when it comes to just the surge, I expect more of a consolidation at this point. Taking a look at the Kiwi as well. I mean, they're almost the exact same chart. So on the US side, things just don't look like they're going to really give me too much of an advantage, even though I've seen a pretty decent surge over the last couple of days. So let's jump over to the U.S. yen, and let's take a look at, hey, what's the strongest and the weakest doing? Well, it's kind of what you'd expect. A really good consolidation move, a breakout, just feels a little bit overextended. Outside of that, the other one that I did think that showed a little bit of strength was the Canadian dollar. But what makes this difficult is what do you pair it with? And so here's the CAD versus the US. You can see it's just kind of this slow moving higher where the CAD isn't really falling apart, but the US strength is just kind of outperforming it. All right. So let's see what the CAD could do against something else like the yen, something that's been super weak. And this actually shows a little bit more promise. Now, it is a pretty good surge off the bottom, breaking out of resistance, but if I can see some consolidation here, I might look into this pairing with continued weakness, I should say, in the yen, or just yen staying sideways and continued strength in the CAD. But if this can kind of perform a base or create some sort of a measured pullback, this would be something that I would like to get into the long side. But after this surge, I feel like it's just a little bit played out. So let me take a look at the Euro CAD, right? The Euro was kind of a -2 when it came to momentum, and the CAD was pretty strong, and it really hasn't confirmed much. Just a fall. The CAD has been outperforming this for quite some time. I'd like to see more of a rollover. I don't want to know if I wouldn't be happy getting into something here with a target there. I'd like to see something a little bit more dominant or a little bit more definitive, and I'm just not getting that yet. And maybe I'm just looking too early after the markets that we've seen over the last couple of days, especially with some of those announcements as well. So unfortunately, I don't have many trades for you, but we are starting to see some pretty cool reactions when it comes to some of these currencies. U.S. markets do close lower on the session, but the NASDAQ held up by strong earnings from Meta and Microsoft. I mean, I believe all three of the markets would be down about 0.5%, 0.75% on the Dow, but the strength on those two stocks alone really pushed stuff up. But be mindful on the SPX, folks. That big red candle, it is a bearish engulfing candle, and it has a sustainable, or I should say a significant amount of volume attached to it. We just got to see if that's going to follow through or not. USD moves higher on the FOMC and economic numbers. However, there is a massive push-pull going when it comes to the Fed against the Trump administration. There is a lot of tension there. So we'll see where that goes. Just follow along with sentiment, because that's going to give you the truth. Where money goes always tells you where to go. Play relative strength and weakness. If you're uncomfortable, you don't have to make a trade like today. I didn't really like anything out there, so I'm not going to. Proper position sizing as well, and let's just kind of keep our eyes out and see if anything else rolls up. Thanks, guys, for joining me, and we'll talk to you next time. Bye, everybody.